Well, good morning, everybody. Happy Friday. We made it through another one. Looks like the market is having a little bit of a down day. I have not looked into the news yet. You know me, I don't really have a plan going into these videos. I get a little time in the day, I open up my software, and I decide what I want to do. Make split second decisions and look at the situation, see what's going on, take profits where we can, uh, buy some options where we can, sell some options where we can. That's the way we prefer to do it. But yeah, let's take a look at our positions. What's going on? All right, let's see. Still down a little bit here on Intel, as to be expected. Still down on silver. The two that we were assigned, not a whole lot of fun there, but it just takes time, no big deal. Everything else seems to be having little bitty green days today. We got some green going on in the profit and loss still since open. So go look at the profit and loss percentage since open. We can see that T is 72.2%. Just not long before I started recording, I peeked in here, and this is actually 77%. And I almost closed it right away, but I was like, no, I'll wait and I'll close it when I'm recording later. Uh, the reason being is, up around 75–80% of the profits. Why wait an extra week to try and get that 15%? And things can change. So what we'll do is we will close this out and take that whole $13 profit out of the 18 premium we collected and lock it in and be done. And basically, when we sell the puts, we're hoping to keep the premium. We're not upset if we do get assigned the shares, but where you make this faster profits quicker is when you buy the premiums and then say the stock price starts moving up away from your strike price, increases those profits pretty quickly. So, if you're hoping to acquire the stocks, you can hang around and wait for it to go down, but that's kind of silly. You can just take the money and then pick yourself a different spot on the next time. A little closer to the money if you're really trying to get assigned, and a little farther from the money if you're only trying to collect the premiums. So, yeah, let's see. Let's see what the action's like here on the chart for AT&T today. Okay. Yeah, I think it was obviously opened here, did a little dance. It's here now. I think it was right up here near the top of the wick, probably when I first looked at it earlier. It can come back up, it can go down. We don't know. So let's go over here, take a quick peek, and let me just make a window a little bit bigger here. There we go. Not that we need it with the space here, but let's see. Okay, so let's right click this and close for profit. Well, there's a couple different ways to do it. We can just close the position, which will open up a window to select our pricing we want. We can, I haven't showed you guys this feature yet, but we could close for profit. You can set a very specific profit that you wanted to have the position automatically close at. You don't need to be at your computer paying attention. If it gets to that potential profit, then it's done. It closes out for you. Next time you open up your account, you no longer have that position. The proceeds are in your account and you're ready to go. So we can leave it at 7. We can bump it to 75. We can type in 73 if that's what we want to do. But let's just take a peek here. Buying it back for 6 cents. So that doesn't sound great. We paid 18, or excuse me, we collected 18. We sell it for 5. We're going to keep 13 cents, which is the $13. We can get greedy and try and go for the number I saw earlier. which would be keeping 14 cents or $14. But yeah, I'm not really sure on that. Let's go back and take a peek here. What are those options again? You know what? Let's just close it. I'm gonna go down to that mid price, 15 cents. Keep the $13. Move on. Pick another one and go. And it's working. So let's see if that gets filled here while we look around at some other stuff. What I did do a minute or two before I started recording was I opened up Finviz and that stock screener that we set up here. Well, I created a video the other day. I launched that, I believe, on Thursday, day after Christmas. I think that went live. If you haven't seen it, you can take a peek and see how I locate the stocks that I plan on trading options on here. So basically set up some real simple criteria. Uh, Go back and watch that video if you want to see how I did that. And for the most part today, what we did real quick, because the market, as we know, is having a little bit of a rougher day today. We're having a red day. So on red days, we're looking to sell premium, or I should say more specifically, sell puts, because stocks and underlyings are on the decline. You can get a little better premium for them on those days. So I want to see if there's anything that catches my eye. So back to Finviz. Basically, with the criteria I have selected, real simple, mid cap and above. So anything over $2 billion market cap. I'm looking at stocks under $30 right now with over 500,000 of average volume. And there's one or two more criteria in there that I don't think are say fundamentally wise, PE over 15. We want the debt to equity, long-term debt to equity to be under 1. We are also, let's say, here's the list of all 5. But let's just go back to the list here. So what I did here is within all this criteria and being a down day, I am sorting by the price change or the percentage change. So this is the stocks that fit this criteria that are having the rougher day. So when it's having a rough day, you want to take a minute and look at the stock and see if there's any breaking news that might be detrimental to the stock. I don't know, insider selling or, corrupt bookkeeper or anything that really will tank a stock. It can be a long-term problem. If anything like that shows up on your radar, you run for the hills, you get them off your watch list, and you forget about them for a very long time. But basically, so now I have this sorted by guys having the rougher day that meet our criteria. And I'm going to start scrolling down the list, and I'm looking for things that companies I recognize the name, familiarity, because it has an awful lot to do with the volume, the liquidity of the underlying. So basically, Riot. Okay, so that's a Bitcoin or a crypto play. Hims, hers. Okay, boner pills. Hey, important to a lot of people out there. So, but it's a stock I've actually watched in the past because I was interested in getting in it. So we may take a look at that. Not familiar with a bunch of these. SoFi, I'm already invested in one of my larger accounts. Mara, we have some puts sold in this account. Uh, Anything else jumping up here? Celsius Holdings, consumer defense, beverages. Okay, so that's a Celsius energy drink. I hear a bunch about it. I don't know much about it. I may want to take a look at that one there too. Let's see. Upworks I've heard of for sure. Um, okay, so I've already added Riot and Hymns to the list. CELH. Let's take a look at that one too. Let's see. Celsius. Okay, let's see what that's doing. First of all, let's add it to our list, get it on our radar so we don't forget about it. And let's look at the longer term chart here. This is not exciting unless you're looking to try and catch the bottom. I mean, you can definitely, there's still some plays down here within this band, but I mean, if you look, this was a $100 stock back in June. It's just been on this insane decline. That is not exciting as a long-term play until something happens within the company that changes that direction. But what we can see when we're looking more zoomed in, so last quarter, big drop, consolidation, uh, jump, long-term drop, jump, long, yeah, nothing super exciting about this. In all honesty, if I was to think about this, I would possibly consider putting in, and again, it depends on what the premium is. You can always get in it, get out of it. Not everything needs to be a long-term play you're looking to hold on to. So the 25.20 is the lower Bollinger Band here. I want to say that's going to be kind of like a long-term low if it gets there. So is it still headed farther down? I don't know, most likely. If you ask me, will it pop back up and get you out if you do get in? I'd say there's a fair chance as you keep your pricing pretty tight. But just for fun, let's take a peek here. So let's see. Our moving average is around 29. Our middle price for our Bollinger is about 28. So 29.30, 28.40, and 25.20. Those are the active numbers we're looking at. Let's look at the trades. Short-term trade next week. Let's see. What did I say? It was 25, I think. 25, 25.50. To be honest with you, it's a $38 premium for a week. Probably, 28 delta. Probably a fair, little better chance of that. I think going into money just because it is on a downward trend. So we're gonna, even though the numbers are the numbers, we're gonna skew to the low side just knowing that this is on a downward trend. So more likely to go down than up is what I'm saying. At least in my head, the way I'm seeing it. You might see it different. But yeah, let's look at a little farther out, January 10th. All right, we're talking some premiums here. $76, $60 down at a 28 delta. You could probably arrange nearly 50 cents down here at a 23 delta if you want to be a little more cautious and just take an extra $45 to $50. That's not unreasonable. But with something that's moving downward and I won't say rapidly, but I would stick with shorter term. Let's just look at January 17th, the normal monthly. What does that got us? $25, or excuse me, yeah, $25 strike price is, just about the 30 delta, and you could probably get 90 cents on that. Not terrible. Not terrible at all, to be honest with you. Let's look at that chart one more time here. It is in the oversold. It's been in the oversold for over a week now. So how long does it typically stay down there? Stayed down here about similar time frame here just recently, and then popped up. So it might be a reasonable play. Could this kind of be kind of a double bottom here? Actually, this is a little lower. So if it doesn't quite get down to let's see, what's the low here? 25.23, 25.34. So yeah, if it doesn't quite get down there, it may not get down there again. Who knows? This might be the real low, the turning point, and it's headed back up. we can't predict. We certainly can't predict. So, um, I do kind of like the premiums on this, but let's take a look at the others that we added here too. Riot is basically bouncing off the. Ooh, this is not a good sign in my book here. You quickly look at the Bollingers, I'm like, you're thinking, okay, it's bouncing off the middle, headed to the bottom. We could sell a put down here around $10 and see what we can grab. But what I'm also seeing is this moving average line here. You can see it came below, came up, and now, well, the moving average was acting as support here. There's a chance this could have just turned into resistance. So that could be headed farther down. So that's not super exciting to me because you can see, it wasn't that long ago back in September. It was down in the $6 to $7 range. Um, that's not exciting. What else did we add here? Kind of hymns. Let's take a peek at hymns chart. All right, zoom way out here, get a little bigger look. Okay, so it's got a kind of an upward trend. Is the reason I've been looking at it in the background anyways. Just was way outside that upper Bollinger. So that became, definitely overbought, dropped back down. Doesn't look like it used the middle Bollinger Band here for support here, almost touched here, not there. So it broke through here. I want to say there was an earnings back in late September, early October. I remember hearing that, listening to some of it, and I think they had a good earnings, and they jumped through. Obviously, blew through the. They're not even near the Bollinger Bands. That's the 3 to 4 standard deviations. It's insane. Will it maintain that power? I don't know, but it's still considered oversold here or overbought, excuse me. And so I would want to come down, be more interested. Chart wise, I'd say it's not what I want to see, especially seeing after this massive run here. Um, Can it regain that run? Well, it blew above the upper Bollinger here, came back down, came close to the middle, blew back above, come down, touch the middle, blew back above, come down. I mean, this is either a buying opportunity or consolidation phase before it goes back into some sort of a normal trading range. How often does this happen with this stock? Well, it definitely way above there, goes back down below the Bollingers, way above. So this is a high beta stock. This thing is farming all over the place. So I think I would just continue to keep an eye on it. I would want to still be buying in the lower half of the Bollingers on this. I could be wrong. I have a tendency to sometimes miss those super high flyers because I'm always waiting for a pullback that never comes on some of the crazy ones. But being a little more cautious doesn't hurt my bottom line. Just miss some opportunities. Don't try not to lose the money. Let's take a look at Celsius again. I mean, I don't know why I'm sitting here talking smack on it a minute ago, but at the same time, I mean, we're below the moving average. We've been below the moving average since June. Okay, so when things got rough earlier in the year, they've just been down. I'm still going to look at it as a short-term pop kind of play here. So I would say bottom bulge is 25.20, so maybe we look at that 25.50 strike price, or the 25 strike price being just outside of that Bollinger. January 17th, 25 strike price, $90. $94, just like that, $95. It's going up. So let's man, Let's see if we can get $95 on that real quick. It's bouncing around in that range. We'll let that stew for a little bit. Our T is still working. Let's replace that. Let's go up the penny. We'll just take the 12 cents on that. That's a 2/3 gain. It's filled. So that was a 66% gain on that one. We collected 18 and we sold it for 6. So we kept the $12 and T is now off of our positions list, but still in our watch list because we're going to play that again. We're just going to look for better premiums on it. I wasn't excited about the 18 to start with, so that's why I didn't mind selling it off for a little bit of a gain. Okay. I don't think we're probably going to get this soon, so let's yeah, drop back down to 87 now. So let's go back to the original 90 we saw it at. I mean, that's between the two. And we're filled. So we're in Celsius. And I'm going to watch that one closely. Basically, if that just starts to pop like I think it's going to and move in the other direction, I'll collect the profits on that. So yeah, that's all we're going to do today. We'll add Celsius to the spreadsheet. So it's January 17th. It's $25. And okay, we duplicate our master. And CLH and open today, sold a put for January 17th, $25 strike price, quantity of 1, I got 90 cents, $90 credit, 1.1, 0.13, and I'll have to look back at the buying power. But anyways, yeah, that's all I think we're going to do today. Nothing else justifies selling. I mean, the Pfizer, when I looked at that yesterday, and I want to say it was up over 50%. I thought about closing it, but for some reason I was thinking today wasn't going to be a red day and could probably close it for a little bit more, but that's okay. That is a whole, 3 weeks away, so plenty of time for that to either make us some money or get us the stock. I'd prefer it to make us the money, to be honest with you, because it's moving in the upward direction. I'd rather just collect that, keep that premium, and put another trade on with that money. So as always, thanks for watching. Hope you appreciated it. Hopefully you learned something. Put anything in the comments you have to say. If you know a better way to do things, let me know. If you have any questions, I will try and answer them the best I can, but I am not a professional. I think that's obvious. So yeah, take care. You guys have a great weekend. And as always, thanks for watching.